Hey there, traders. We're back for another recap. Today is Tuesday, August the 5th. We're looking at this down candle. They closed kind of in the middle of this stuff. I left the trend line on from before. We talked about this in yesterday's video, the importance of it. It came into play today, kind of gave us an indication or a clue of the overall sentiment. Hint, it was kind of bearish. At least that's what I'm thinking at this point. We'll talk about this when I come back to this chart, and we'll dig into it a little more. But to start with, we'll head over to Ticks&Trades.com. Look at the member side where the daily levels were posted this morning at what time? 9 o'clock or so, 30 minutes before the opening bell. Here are the levels. Here's the trend line. This is the approximate location of that trend line from market open to market close. And you can read through the notes. 632 was a level we had on the board the previous day, and that was important later, especially in the pre-market. So that was kind of our access level. If they could stay above it, they'd be in good shape. But if they got below, the bears could be in control, but the real tell would be the trend line. In other words, if price was pushed down to the trend line, that was going to be kind of the line in the sand. Said if the trend line does not hold, if they don't bounce there, it should not come as a surprise. We'll talk about that in a minute when we look at the 1 minute chart and talk about the trades per the rules based at the levels that were hit. Also mentioned at 10 a.m., there was a PMI data release. That came into play today as well. So we have the entire day. To the right of the dashed line, I'm just going to move it out of the way here, is today's activity. They started up here, actually, and immediately spiked 632 and fell down. Now, I give the market 15 minutes to settle in, so this would not have been counted as a trade, although it worked pretty well if you were willing to trade early. I've just found that more often than not, if the level is hit soon, within a couple minutes or so of the open, you'll usually find yourself on the wrong side of that trade. So anyway, 945, where were they? They were right below. The close of the 945 candle was 631.95. So not going to adjust this level. It's so close, 632. So the plan will be to go short right there. I'll talk about my trades in a minute. I actually went long and ended up reversing and going short and rode this thing down. Saw some writing on the wall and some other indicators on other time frames. But going short here would have immediately put this trade out of the money as they flirted with your fumble threshold. That's why I put these indicators here. The fumble threshold is the red line. And of course, the green line is what you want price to come down to. That's your target of 4 points in the E-minis. The equivalent here is 40 cents in the SPY. So sticking to a process, I mean, just act like you're an algorithm. If X happens, then do Y. So what is X? X is at 9:45 a.m. The close is 5 cents below the level. So you're going to go short in the E-minis as soon as price hits that level. You're going short, you're giving it some time to develop, and sure enough, you're given a base hit as they fell. And that was helped by that 10 a.m. PMI data release. They started falling pretty fast. Now, I wanted to see what they would do with this trend line. When they hit it, we could make the case that it was somewhere in the neighborhood of 629.62. They bounced here. So if you had gone long at this trend line, instead of just sitting back to see if the bears were going to be strong enough to power through this thing, and if you were astute enough and quick enough, you would have jumped out at a wash, given a chance a few minutes later, because they came up within 10 cents of a 40-cent profit objective, or 4 points in the E-minis. The high here, the next candle after the trade was entered, was 629.92. So that would have taken some work and some skill probably. But anyway, maybe the best thing to do was to not even get into this trade. But going long there, jumping out at a wash would be no harm, no foul. They gave you some clues that the momentum was downward at this point. But if we're going to apply the same scrutiny to this level, as a tradable level, the trend line, then we need to apply it to 527.18. Now, I've already adjusted this. The level from this morning was 627.13. I've pulled it up toward price. So 627.18 was the operating level. So you would have been long when the SPY hit 627.18. A couple minutes later, they almost hit your profit objective. The high was 627.50. 8 cents away, and then 1 minute later, they're down to your entry point. Just like up here, that's a near miss of your profit objective. It's a clue that perhaps that was all they're going to give, and they could go down from there. Now, I will say, I'm not sure what was going on at this time in the market, if there was any other clues why this could have been good support. I did not trade this level because I already had a good run on the way down, so I wasn't really looking at the market. There could have been something out there that would have told you, yes, this is a good support. Go ahead and buy and just give it time to develop. But anyway, they bounced off this a couple of times. Not going to count this, just to be fair. But this bearish momentum here as they're falling through this trend line is kind of important. This is a chance for the bulls to regain some ground here, and they didn't do it. So when price came back up into it here later around 12:30, this is a really good chance to take a recycle trade. The market's already telling you they're kind of bearish. So going short at 12:31 p.m., that's a nice clean base hit right there. So strictly speaking, 2 base hits playing by the rules. The short up here and the short down here. And we will not count the other ones in the spirit of fairness. But there's nothing wrong with 2 base hits. That is 8 points with this strategy. So here is the recording of some trades that I took, all the trades that I took. I mentioned earlier that I went long initially, expecting to ride this momentum up. There was some bullish momentum here, and I probably would have had a nice little 4-point base hit, but they just missed it because I was holding out for more. What is it, 6 points or so with 4 contracts. So I saw some things, some signals develop that told me that I was on the wrong side of this trade. I need to be short. So I just went ahead and reversed this when they're coming back down. So I lost, I think it was $800. Gave a few points back with this 4 contract long position. So now I'm short 4. I added 4 more contracts, so I was short 8. And almost immediately got some profit in the bag as they continue to fall and just trailed the other half of that position down. So hopefully this makes sense. So I'm short 8, immediately get this $1,500 with that data release news. I'm trailing it down. I take 3 off, put some more money in my pocket, and then the remaining contract I wanted to get out before they got down to this trend line. That's the last $1,000. And I didn't want to trade the trend line here. As I mentioned earlier, I just wanted to see what they would do with it. So I'm glad I didn't. If you had, you would have had the quick clue that it wouldn't have worked and jumped out as a wash, as we already talked about. And I also did not trade 627.13. I didn't really need to, not with $3,900 in the bag already. But that was the money spot. If I had traded, I probably would have let this thing develop. But as we've already talked about, per the rules, that was a wash. But anyway, that's my trades. And I let this thing go for the rest of the day. So there you go. So all the trades quantified on the logs. The first one is the playing by the rules log, the PBR log. And you can read the notes. Base hit the first time going short at 632. And the first time price hit the trend line, we've already talked about that. It was a wash because you would have jumped out of that near miss of the profit objective. But the second time it hit it, you would have had a base hit. Getting ahead of myself, this was the other wash. Talked about that. They're back up to the trend line, a little higher than this at this point, and you had a base on their cycle. So there's your 8 points playing by the rules. And then on my trades, the 4-point fumble on 4 contracts, and then I had almost 12 points, was exactly 11.93. That was a net point on 8 contracts. So the reason you see this here is because negative 4 points on 4 contracts is the same thing as negative 2 points on 8 contracts. That way I can sort of keep it here. So 8 puts me at 39.72 before commissions. And the reason I have this thing backed up to Monday, July 21st, because this week here, Monday through Friday of that week, the only trade I had was that bloodbath, but I have now redeemed myself. I was almost there by yesterday, but I definitely got ahead of the curve today and just want to show you what that looks like. Back to the daily chart. So while they did close the day under that trend line, and with respect to what the trend line means, that's not necessarily bullish, but in the big picture, this is the daily, and of course we have the weekly right here and the monthly. There's nothing bearish about these larger time frame charts. So if there is some type of pullback going on, I still maintain that this 50-period moving average, if they get there soon and they want to come down, the 612 to 613 zone is a pretty good area that the bulls could defend or needed to defend to push price back up. And there's a lot of space in between here. There's going to be other levels that are more precise, but in the big picture, they could just be in the middle of a reset at this point. But there's really no reason that the bulls can't try to get back on top of this trend line, establish some dominance to continue to climb back up all the way to the top and try for new all-time highs again. I think they already filled the gap here. So the close from, what was this, Thursday, 632.08, got to a high today of 632.61. So they filled that gap and they pulled away again. So they're in the middle of stuff. So there's not a whole lot more to add to that. As you know, I will have more precise levels tomorrow morning. And we'll just take one day at a time. Thanks for watching. I appreciate the support. I will talk to you again in the next recap video.